Greetings, comrades. Well, I never thought after I left USSR that I would ever use that form of greeting again, but since we are in USSA now, it's still better than use comrades in arms, and if things are going this way, who knows what form of greetings we're going to be using. Anyhow, this is David DT, Trading-to-Win.com. In my post a few days ago, that's the post you're looking at, it's all starting to make sense right now on D-Wave. I stated my opinion that shorter term we might go to 1120, 1250 area. And in this video I would like to reconsider it, and I think it's very unlikely, still possible, but very unlikely that we will produce any kind of meaningful rally, and I will explain why I don't think we have to take into account anything that we see on a daily D-Waves. So let's proceed to our first chart. As you already know, my charts are quite messy, but unfortunately, that's just under the disclaimer, I cannot remove anything because everything you see is needed. And I hate to have different charts and jump between charts, so you gotta deal with that. Anyhow, you're looking at a weekly chart of S&P 500, and this is the top in 2007. And as you can see, we have Fibonacci time series of the top, and we have new Fibonacci time series of the bottom here, and we have long-term channel. It's been in place, as you see, since July 2008 and so on. Based on D-Wave weekly analysis, I calculated using traditional DMARC methodology that ultimate bottom should be somewhere in 584 area, and this is what I think is going to happen. We're still in a sell signal. We never penetrated risk zone right here. We're under TDST sell signal. We're on a bar 3. New week will start tomorrow. I think we're going to have some meaningful pop to, I don't know, slightly below 900 area probably. And from there, by the end of next week or the week after that, we're going to start descent to TDST support line right here. We're going to bounce off it a little bit to retrace to 38%. And after that, we're going to continue glorious decline to ultimate target, which somehow at the same time is midline of that long-term channel. Well, basically, in order for bear market to end in the middle of September, in the middle of October, as you can see, we're going to have different Fibonacci time series right here. We really need to prove, market needs to prove that it is going to be able to bounce off the middle line of the channel and never look again. So we're still going to be in multi-year bear market beginning from year 2000, but at least this phase of bear market is going to be over for a while. As you can see, that level 584, as I said, it was calculated based on traditional DMARC analysis. At the same time is around 127 retracement from bottom in March to the top on June 11th. So far it's playing very nicely all together. Alright, we're looking at D-Wave of S&P 500 on weekly scale. As you can see, W1, 2, 3, we are in confirmed W4 right now. And one thing you need to know, there are two kinds of retracements in D-Wave theory, deep and shallow. Unfortunately, 50% does not qualify right here. Does not qualify as either deep or shallow. let's say if it would be shallow retracement, W4 would definitely go to 61.8%. If it would be deep retracement, then we're done. Right here, 38%. So it's basically, in reverse. 38, 61, 61, 38. Unfortunately, we moved down on wave 2 of 50%. It's very difficult to predict what's going on. It might be 38, it might be 61.8, or it might be 50, which will be coincidentally about 1050, the area I was talking about for suggested rally. We cannot even say right now that we are already in wave 5, because wave 4 might still extend, shall market move up. What I can say that using traditional methodology, wave 5 ultimate target is calculated based on wave 1, and it's high minus low times 138, and it is subtracted from high of wave 2. And there is a catch: if it is subtracted from high wave 2 and wave 3 already extended below that level, instead of multiplier 138, we're going to use 274, and 274 multiplier puts us in 584 area, which you saw in a prior chart right here. 584. Right. I don't really know how much time for this video I have left, but I'm going to cut it short. Maybe I'm going to make another video for hourly analysis, and maybe I'm going to talk a little bit about dollar, but I'm not sure I'm going to make that video. That is it for tonight. David, Trading-to-Win.com.